our long-standing participation in the conference speaks to the importance that we, IFC, together with the World Bank, place in Africa. And this is where, if I could share a little bit of anecdotal impression that I had, I certainly had the privilege of living and working in Africa almost 2 decades ago in Abidjan. And compare with my new experiences. Since I left Abidjan in 1997, I haven't been back to Africa until last year when I joined the IFC. Now, since last year, I have visited Africa 5 times. And certainly my own impression of Africa has dramatically changed. And I certainly will go into a bit of more detail. And therefore, this year's theme, fast-tracking private sector participation and investment climate policy for economic growth and competitiveness, really recognizes the exciting opportunities in Africa now. And Africa is the #1 priority for IFC. Now, last Monday, our new Executive Vice President and CEO, Jingdong Huas, got on a plane to Dakar for a 4-day visit to Africa. And it was his first day on the job. So certainly sending a very, very important signal and showcasing our commitment to Africa. Jingdong's first IFC project was to sign a loan to help the Kenya Tea Development Agency grow its operations. During his visit in Africa, he met with World Bank and IFC staff. And because inclusive growth and competitiveness require an enabling public sector and a vibrant private sector, it is very important for the World Bank group to work together, whereas the World Bank addresses the public sector enabling environment, and IFC focusing on getting the private sector to become very vibrant and profitable. Now, Jingdong also met with IFC clients in Africa who are contributing to long-term growth, jobs, and shared prosperity. And as Mokhtar had indicated, despite a weak global economy, Africa is truly experiencing strong economic growth. And we know there is a tremendous momentum in Africa. And as a treasurer of IFC, let me share with you that I was truly astonished by the recent success of the Zambian government when they issued their first ever Euro-dollar bond. So the government had planned to issue a $750 million bond. And they got $12 billion order books from over 400 international investors. The final interest rate they had to pay was much lower than that Spain has to pay. So that's really a great indication of investors' interest and momentum in Africa. And we understand Rwanda is similarly planning a Eurobond issuance, and certainly hope that they will be very, very successful in their endeavor. So IFC is certainly very determined to sustain this momentum. Less than a decade ago, our own investment in sub-Saharan Africa was less than $200 million. But last year, I'm very, very happy to say that our investment in sub-Saharan Africa reached a record $4 billion. Our advisory services were also very active, and we covered 35 countries with 123 projects. In addition, we mobilized $1.2 billion from other investors. We plan to support key sectors that underpin growth and job creation, and that is infrastructure, health, education, and agribusiness. And we focus on helping smaller businesses grow and create jobs. We are also contributing to the development of Africa's capital market, a topic very close to my heart. And certainly, we support investment climate reforms. Now, it is still true that it is quite challenging to do business in Africa. But I think the tide is turning. And I'm sure we will be hearing much more about this from the participants and panelists today. And the pace of regulatory reform has truly picked up across sub-Saharan Africa. And the 2011 Doing Business report, and a report jointly produced by the IFC and the World Bank, found that 43 economies in sub-Saharan Africa made their regulatory environment more business-friendly in the past 6 years. And last fiscal year, IFC's advisory services worked with governments to enact a total of 143 laws and regulations. And that led to approximately $300 million in private sector savings. Before the end of this month, the 2012 Doing Business report will update us on how things are progressing. But we do have good reasons to believe that we will continue to see strong momentum there. I think these changes are really laying a good foundation for investors, including investors on the continent, but also for investors outside of the region. And as I indicated through this Zambia Eurodollar bond, that Africa is increasingly attractive destination for investment. And our job in IFC is to help create and shape such opportunities. For example, last May, we launched the Pan-Africa Domestic Medium-Term Note Program. And the objective is really to raise local currency financing, as many of our SME clients generate revenues in local currency. But also, this offers investment opportunities for local and international investors. We firmly believe that an improved investment climate and more robust capital market can and should develop hand in hand. So to create a vibrant, flourishing private sector that can drive growth, jobs, and prosperity. And as I have indicated, we are truly scaling up our own intervention and investment in Africa. And we are also strong partners to help investors realize opportunities in the continent for two objectives. I think the first is really to ensure that we, together with private investors, that will support projects that will have private sector development, growth, and job elements in the region, but also to make sure our investors adhere to environmental, social, and corporate governance standards. And let me give you some examples where we have helped Chinese investors in Africa. For example, in June 2011, we closed our first syndication with Chinese banks for a project in Africa to help Ghana Vodafone to expand mobile and broadband services. And there we provided about $115 million financing. This included $82 million syndicated loan from the Export-Import Bank of China and China Development Bank. We also made our first direct investment, $10 million, in a Chinese company operating in sub-Saharan Africa, CREJ Estates, in April 2010, to help build a business complex in Tanzania. We are generating interest among Chinese manufacturers to help develop affordable off-grid lighting for millions in sub-Saharan Africa under the World Bank Group's Light in Africa program. IFC has also been advising China Banking Regulatory Commission, CBRC, and Ministry of of environmental protection on China's green credit policy. And because of that, we are now facilitating knowledge sharing activities for banking regulators from Nigeria, Vietnam, Bangladesh, and Thailand with CBRC and Chinese banks. Up to now, 12 Chinese banks, 5 Indian banks, and about 70 African banks have participated in the IFC Global Trade Finance Program. And we are exploring new initiatives such as RMB trade finance to facilitate trade between China and emerging markets. But of course, we are hosting this important summit in Japan, and I think I'd like to take this opportunity to call out to Japanese financial institutions and enterprises, and IFC is very, very eager to work with you so that we can help with the private sector development in Africa. We certainly hope to do more, much more, to encourage investors in Asia and other places to invest in Africa. And this will ensure a much more stable future and allow Africa to better enjoy the fruits of growth through increased stability and opportunity for companies and the people they employ. And to sustain Africa's rising trend, the continent needs more investment. Domestic and foreign, more trade, more employment, and an enabling environment. And we will continue to support Africa to achieve this. And we hope that our many clients and partners here today will continue to share in our confidence in the continent's future. I think IFC's unrivaled global expertise in private sector development truly make us a strong and unique partner. And we look forward to excellent discussion today and the opportunity to work more with you to ensure Africa's continued progress. Thank you very much.
Doing business in Africa, you can't afford to be without Africa Investor.